Welcome Jaideep on the stage to take us through an overview of what ADOC is. Do note that while during the presentations, we will also be running short videos, which is obtained from various professionals who have used ADOC, and these are professionals at the ground level. Jaideep, it's all yours.
Thank you, Jyoti. Could you just start the presentation? Yeah. So as we start launching ADOC, firstly, yes, one of the reasons we chose this date also is the 75th anniversary of the CA day for our profession. So we thought this is a good time to start talking on audit quality. Fortunately, we are running on time. Now, what is it that we wanted to create? Balaji did mention a vision. We've gone ahead and said in our site, we've said it earlier. One second. Sound nahi aa raha hai. That we want to be a benchmark standard setter. The question is, what is that?
Profession by the profession for the profession.
We want to be a benchmark standard setter because once we set a standard of quality, it has to be better than what is there in this auditing standards. We are not setting the auditing standard as the basis. But I think Balaji mentioned earlier, he's not worried of what NFRA says. And why is that? Because their expectation is we comply with the auditing standards. Now, if we are doing better than what the auditing standards require us to do, no regulator will have a question. So what we are perceiving as our vision is to come up with certain levels of audit quality which surpass the requirement, because the standard is supposed to represent minimum requirements. That's not the exhaustive requirement. It's inclusive. That's the minimum requirement a firm has to do. And therefore, we do not want to limit ourselves to what's required under the standards. We are looking at coming up something that surpasses the requirements of these standards. And how do we intend to do it? We intend to do it like a guide. And this was Balaji's concept of course, taken from Abraham Lincoln when we said, of the profession, by the profession, for the profession. Which means anything that we do, it's going to be interactive. And as we go through ADOC, we've also said, we show some videos of, first impressions that were there. It's because we want to get inputs from the profession and give it back. The benefits when you start using something like this across firms is different firms have different clients. They get different experiences. Those inputs come into the file. We take guidances from that and start sharing with the rest of the profession. Which means you might have identified some risks which are very specific. That's because you applied your mind, thought of something that can go wrong. Because what is the risk on a financial statement? Something that can go wrong. Which someone else might not have. But when this starts getting circulated, when you start building up a detailed risk database, it becomes guidance for all chartered accountants. And that results in what? That becomes a sharing among the profession. And that is why we are saying it's of the profession, by the profession, for the profession. So why do we need an audit documentation tool? Of course, I think Balaji mentioned earlier as well that the institute has recently come out just a day or so back of working paper templates. So the institute also has taken cognizance. There is a need for documentation. And I think sir mentioned earlier, what is not documented is not done. And most of the concerns that come out from the regulators is absence of appropriate documentation. They're not accusing the auditor of not having done the job. They're accusing the auditor for not having maintained documentation, evidencing that they've done the job. And that's the key differentiation. As long as you have something to support it. And it's a good question, because what do we do as auditors? We ask our clients to show evidences for the transactions they have done. So there's nothing wrong on a regulator asking us for evidences of what we have done. And therefore, it's not something new. We feel free asking our clients about it, but it's getting a little hesitant when somebody asks us for the same kind of evidence. So key thing comes in on maintaining documentation. So the reason we're calling this more as an audit documentation tool and not what otherwise is known as an audit automation tool is, I think in all the panel discussions, we've come to a conclusion, audit cannot be automated. There may be a lot of talk of AI coming in. Will it replace? Because I remember a conversation a few years back. There was a small article in the newspaper where somebody said they have developed an AI tool which can do a bank audit in 2 or 3 days. And after that, there was a lot of hue and cry among a lot of the articles who were recruiting, who said, do I have a future now? Will I become obsolete if AI comes in? Now, that was very amusing, because audit, however, is such an area that cannot be automated. You can automate processes, and I think that was used, as Girish mentioned it appropriately, extractive AI. You may use tools developed by AI, you may use tools developed by technology, but the end of the day will always remain tools. They cannot replace the human brain, especially for audit. And that is why we prefer to call it as a documentation tool rather than an audit automation tool. Now, why do we need something like this? As I said earlier, yes, the regulators are looking at it. There is a need for documentation coming in. There is a need for improved quality standards, especially around auditors' independence. Now, if you look at what, and I think that came as a discussion earlier too, key aspects that NFR has raised questions on is A, auditors' independence, B, having documentation of whatever they said they're supposed to have done. Both of these are missing. Basically, it's compliance with independence is the ethical or professional standards that exist, looking at the audit evidence and overall quality practices. And why is the overall quality practices coming in? Because all documentation requires falls under the category of quality. So this is one key need that the profession has for improved documentation. Of course, there are other expectations from stakeholders, most of the time the shareholders. Each time, if you look at everything that's come out, all the cases, and if you look at how things have moved over the years as far as the audit profession's requirement, I think there was a mention of Enron a little earlier in one of the conversations. Enron happens in the year 2001. Other than resulting in eradication of one of the largest professional services firm at that time, Arthur Andersen just disappeared from the CA fraternity. It was no longer, it was the largest. Of course, now Deloitte sits as the top, but at that point of time it wasn't there on the list and nobody was as big as Andersen's in that time. But they disappeared. Resultant, he also had something called Sarbanes-Oxley that came up. So each time there has been a scandal, an audit failure, regulations have become tighter and tighter. The PCOB got set up fully to look at what auditors were doing, similar to how India now has NFRA looking to see what auditors are doing. You had commenting on requirement of internal controls coming in with the Sarbanes-Oxley. We've had our ISC reporting that's come into India. Next, what happened? 2008, you had Lehman Brothers. Another big scandal. What happened? The entire revision of the accounting standards started taking place. You had IFRSs coming in to replace the international standards. Now, of course, India has also taken our Ind AS in with a lot more requirement. If you look at how your financial statements were under IGAP and how they came under Ind AS, the size of the financial statements nearly doubled. The number of pages, the amount of information you had to carry. The financial statements started looking like an MIS report with the amount of data they were putting in. Now, these are all the regulatory changes that came because of audit failures. And of course, we have our famous 2009, what happened with Satyam. What did that result? The entire Companies Act underwent a change. Because they realized that the Companies Act was not providing sufficient regulation over auditors. The NFRA itself was referred to and brought into existence. Of course, the time it took for all of this to take into effect took some time. But these large instances of audit failures, the only thing that could done was regulatory changes. I think it was mentioned, I think Saranjit Singh said, we cannot wait for regulations to force things. As quality, we need to charge and start addressing it. We need to take cognizance of what our profession is now, and we need to start improving. So I think even Jyoti mentioned earlier, we are trying from True and Fair's perspective to try and see what it is we can provide. And how have we been trying to do this? Each of us as partners or the time that we faced within a Big Four, all of us are ex-Deloitte. We have been involved in multiple types of varieties, industries of audits, listed, unlisted, private, group referrals, cross-country. We've been involved in quality initiatives, we've been involved in internal firm reviews, a lot of activities, and we felt all of this experience we've gained is, however, restrictive within one single practice. That was the India practice of Deloitte. And every time we were recruiting, and I had discussions, whether it was with recently qualified CAs, and I remember having a discussion with one of them when I said, how do you go about recognizing revenue? And he very gladly said, every time an invoice is raised and the GST amount is paid, we can recognize revenue. So I was surprised. It had nothing to do with accounting standard. He didn't refer to AS9. He didn't refer to Ind AS 115. Which means, as a practice, a lot of people have come comfortable with the fact that as long as I paid the tax, I can recognize revenue. And if that is how one person starts auditing, you will never know what's the quality of the financial statements coming up, because the understanding and interpretations that they have is very different from what someone else may look at. And therefore I felt, are we doing it right, that within the firm we developed so much skill set, so much knowledge, but outside, that's not the level of knowledge and experience that exists. And that's when, when Balaji first gave the idea saying he wants to do this, I was very excited because I was planning to leave Deloitte and start something like this. And I said, yes, this is a good plan, a good platform. Actually start sharing what we have learned, what we have gained, and start sharing it with the others. And therefore I liked that slogan when he had, of, by, for the profession. So what did we start doing? We did look, when we got together to say, let's try and come up. And we started from a blank slate. We didn't look at what others had. We didn't look at, try copying what others were doing. It's of course, after we had developed quite a bit of our content, we actually realized the market already has some audit tools. When we started out, we felt each firm had their own. Deloitte had theirs, PwC had theirs, KPMG had theirs. So all the big 6, 7, 8 probably had their own audit tools that they were using. And we thought we were coming up with something new. Then somebody told us there's something called CCH. Somebody said there's something called Caseware. Any audit, beyond audit. Then suddenly realized the market was full of these tools. And we started wondering, saying, are we on the right path? So when we started having conversations with a lot of CA firms, they said, you guys are on the right path because none of these tools had all the content that you are representing. And nobody had documented so many risks. They were very generic, whereas the ones we had put in was precise. There were no control matches that were happening, whereas we had given controls. We had explained the procedures. We had provided templates. They said in comparison, your content is very good. And that's one of the background to how ADOC came into being from what we initially planned. We also realized that there's, and I think it was mentioned in the panel as well, one of the needs is to try and manage the attrition. Now, Rishabh correctly said, yes, we have to look at learning, development, and an element of retention. Now, how much can a firm actually invest? Now, if I go back 25 years to the time I started articles, the concept of training was always on the job. We never had classroom trainings. Of course, now most of the firms also have classroom trainings they conduct, but our practice was always on the job training. So what's changed? When I started thinking back, an audit, 25 years back, I would spend about 1.5 to 2 months doing the audit. 25 years hence, I do the same audit perhaps in 3 weeks. So what changed? You don't have time for on-the-job training. You have a lot of these tools have come in, technologies have come in, the fees have fluctuated, the salaries you pay to your staff has increased. You do not get the luxury of time on the field. So therefore, there's a need for, how training should now start moving. And you can't afford that each time I recruit, I can set up a classroom training for the person. And therefore, there's always a cost that comes in. I've recruited somebody today, can I put him on the field tomorrow? Perhaps yes, perhaps no, depending, is this an experienced person, freshly qualified? So we've said no, let's try and see if we can develop our guidances, our tools, which is easy to read. And I know how much of suffering we went with Balaji reviewing our comments, content that we were developing, saying, your English is complicated. As a CA, as a person with 30 years experience, I can understand. But what about the new guy? Simplify your English. And we had to keep revising what we were doing as far as content, and all of us partners who worked with him realized how much time we ended up putting in the whole process. But we realized later on as we did this that yes, he had a valid point. And that was that anyone reading it, as long as they know English, they're fluent in English, have basic knowledge of audit, which means even a BCom graduate who has audit as one of the subjects in their BCom without having to be a CA will reasonably understand what needs to be done. And as I said, no audit can be automated. So everything we put in will serve as guidance. You can be confident a freshly qualified or even an article who's just come in, perhaps done his graduation, has read the audit material, fair understanding of the standards requirements, understands the terms or concepts like professional skepticism, professional judgment. These are terms in the standard. He has to have a fair understanding what they mean. Everything else, at least 80-85% of the audit, he can be guided just by looking at what we have here. So that serves as on-the-job training. So we said, yes, this will actually help firms to try and develop their staff as they take through it. Well, of course, yes, from a quality perspective as well, whatever said and done, an audit cannot be, it's like a CA itself is a profession, and they always say this when you talk to doctors. No two doctors will give you the same opinion. Go to one, he may say you need surgery. The other one says medication is sufficient with bed rest and you will be fine. Now, which doctor do you believe? They can give you opposing opinions. Why is the CA profession any different? It's also a profession. Because we are highly susceptible to individual judgments. My experience will be different from Vishal's experience, Girish's experience, and therefore the way they may look at it will be different from the way I would look at it. So when you start looking at a firm, the experiences of all the partners, the staff will always be different. And therefore the way an audit is approached, there's a lot of inconsistency. And therefore when somebody from outside looks at it, whether it's a regulator or anybody else, they can always question, in this engagement you've done these 10 procedures, but here I can see only 5 procedures. What about the other 5? Why were they not done? You will realize when you speak to the teams, it's not intentional. They didn't do it because they didn't want to do it, but they didn't do it because it never occurred to them to do it. Because they didn't get the idea that they could also do these additional 5 procedures. So now when you start keeping a common platform, common documentation, everyone who looks at them will end up doing the same minimum procedures that are there. You can add extra procedures that are entity specific or engagement specific, but at the minimum you will not miss out on something. So we felt, yes, that's another good benefit that comes in, because that ensures consistency in the way one does an audit. So these are all the reasons we felt, yes, a tool is required. So what did we do when we came up with ADOC? We had built an exhaustive library. We had developed risks across all account balances. We had brought in procedures, templates for starting from client acceptance requirements, what one needs to do. We realized there was a need for more than 100 different guidances that are required when we started populating the list. We are still working on it, but we realized there is a significant amount of guidance required. We realized there's a significant amount of templates required. Coincidentally, as we started working on this, we realized at the back end, even the institute had taken cognizance. They also started looking out for audit automation tools. So they had run a tender asking if somebody can help them develop an audit monitoring tool. You had the NFRA who came back and said all audit documentation should be based on the cloud or electronic method. You should not have manual files. You should be able to even use the word keep it on DigiLocker. Though I don't see how that can help, but they want to start tracking what is getting done by the auditors. As recent as the other day when the institute issued the working paper templates. So it's just coincidental that around this time we started working on this. Everybody's also looking at the need for audit quality. So there's no two ways about it. There is this need that's come up. So what we try to do is try and simplify. This is, as Balaji mentioned earlier, this is not the technology platform. So we've not complicated by using, confusing templates or formats or databases. This is simple Excel based usage. So it's very easy to open. Everybody knows their Excel. They know how to move between cells. Of course, it has some shortcomings. We'll discuss that a little later. But we try to make it as simple as possible. It's easy for anybody to use it to just click on it, open it, fill up the data, close it. It auto saves because it's on the cloud. Why are we launching ADOC as we were today? Because we did say when we all got together, we were looking at the technology platform to actually help. And as Balaji mentioned earlier, when we first started showcasing this, the initial templates, the data we had collected, what we had put together, how we expected ADAT to look at, and Girish mentioned he had the luxury of seeing the initial methods or formats we were started developing and what we were doing. And the feedback we started receiving with some of the firms, because we wanted to get some feedback on what their thoughts were. And as Balaji said earlier, they said your content is huge. If not anything else, it can serve as a guidance, it can serve as a reference library. We can start using it irrespective of how our tools and documentation requirements are. At the minimum, we can refer to it to make sure we've not missed out on something. So they said, why don't you start sharing this with us? Now, of course, this was our IP. We had spent, and we know how much time we've spent in developing this entire database. It wasn't easy. We had to sit and make sure all areas, all possible risks were considered. We had to make sure we mapped all of them to controls. We had to make sure the controls are descriptive enough that anyone looking at it knows exactly what to go and ask for or test. So it was not an easy task. We had made sure that to make sure everybody understands what they need to do, we had provided guiding questions. In the sense, if I need to understand how the procure to pay cycle goes, it's not just procure to pay. We've said first element, if you have to find out how a purchase acquisition is done, then ask these 7 questions to that person. If you want to know how a PO is done, ask these 8 questions. how a GRN is done, ask these 5 questions. So it's for each element or process, we had developed what questions one needs to go and ask. And therefore this serves as on-the-job training. You don't need a senior advising you as to what questions you need to ask or how you need to do data collation. You had put those questions down. And therefore anybody new on the job could go ahead and do it. Now how do we ensure that our IP, pending the technology tool, was safe? So we had to work on, a simplified form. Our technology team is here who's been helping us to say how we will try and share it. But we worked on a SharePoint, and we'll try and demonstrate on a demo as to what this looks like as well. But of course, it does not have the technology features. It is a simple SharePoint Excel based tool.
Launching ADOC, an audit documentation content which represents the core content of the yet-to-be-launched audit documentation and archival tool, a DAT. Based on consistent feedback from various audit firms, there has been an expression of interest to be able to use this content even during the current audit season, pending the launch of a DAT, and so we bring you ADOC.
ADOC provides an exhaustive library of content in a detailed index to facilitate auditors to plan a comprehensive audit of financial statements, including reporting thereon, based currently on the IND-AS framework and in accordance with the Indian auditing standards. The reference content is shared in the form of MS Excel templates, which are easy to use and update.
ADOC can be used for performing, documenting, and archiving audits. ADOC can also be used as a reference library when audit is performed using other documentation tools or outside of the ADOC environment. On-the-job training, a person knowing English and understands audit can perform audit using ADOC with minimal training and support. Consistency in the performance of audit. Since the document template is standardized and exhaustive, the level of assurance on completeness and accuracy of performance of audit is significantly enhanced. Optimizing partner and manager review time. Since the level of assurance on completeness and accuracy of performance of audit is significantly enhanced, the time required to be spent by partners and managers on review of the audit work performed is significantly minimized. ADOC includes sampling templates for sampling based on monetary units, and sampling on random basis. The trial balance feature enables the auditor to match the grouped amounts in the trial balance with the financial statements. Comprehensive library of checklists to facilitate auditors meet the reporting requirements under the Companies Act. Investment made in year 1 of using ADOC can be significantly leveraged when performing audits for the subsequent years, since the planning work paper templates will only need to modify for any updates. Guiding questions to enable the auditors to seek and obtain relevant information for performing the audit. Exhaustive library of risks, controls, IUCs and IPEs for each financial statement note or financial statement line. Exhaustive library of risks and controls for performing audit of the IT environment. Template for testing, design and implementation, and operating effectiveness of controls. Exhaustive library of content for performing group audit. Comprehensive work papers for testing cash flows, going concern and subsequent events. ADOC leverage on the security features inbuilt in Microsoft Azure Cloud and SharePoint environment, which includes the multi-factor authentication requirement. The ADOC environment is also being subjected to an independent security audit covering confidentiality, integrity, and availability principles inter alia to assure the audit firms that true and fair will not have direct access to the information contained in the audit files that are hosted in ADOC. The pricing philosophy for ADOC considers the following: recovery of cost of maintaining the Azure environment, SharePoint, and providing technical support to users of audit firms in case they face any challenges in accessing the SharePoint. Charges for usage of content, which is the intellectual property of True and Fair, based on charges per user of the audit firm, less than 2,000 rupees per user per month. recovery of cost of hosting the audit files in excess of the free data storage limits provided by Microsoft Azure, cost of retrieval of archived audit files in case such retrieval is required. For further details, do reach out to us at contact@trueandfair.pro or visit our website www.trueandfair.pro.
So we did cover some of the salient features that ADOC would have, where we've spoken of checklists being available, content having risks and controls being documented, detailed guidances on how to do a group audit that is required. So if you look at what we have in total, we have about 127 elements covered. When I say elements, we're talking about account balances such as trade receivables, pre-P&E, intangible assets, ROU assets. So the list goes on. You have your class of transactions where we split up. For example, we covered sale of products, sale of services separately, and we looked at those risks that come into that. So in total, we have about 127. This also includes the IT elements that need to be tested. We mentioned we've given guidances for IT audits as well. These individually at account balance level are broken up to processes. As we said earlier, for example, revenue, you'll have customer order to final collection that happens. So there's an entire process that comes in. So for 127 elements, the total of such sub-process, there are about 268 sub-processes. Total risks that we've identified across these 127 items is about 491 risks. These 491 risks have been mapped to about 480 controls. We've also brought in the principle of dual purpose testing, which means control procedures are substantive procedures that are carried out by client personnel. You carry out the same procedures, they become your substantive procedures. So conceptually they're not very different, and therefore we've said you extend whatever you're doing as part of control testing by doing the same procedures directly, and that becomes dual purpose testing, and therefore the procedures become consistent. We also have certain additional procedures, because one of the key things, if you look into SA 315, is if the risk that you've identified, and if you look at SA 330 as guidance, it says if the risk is significant, if the account is material, then you cannot say there's no risk identified, therefore I'll not do any testing. Or if there's a significant risk, you have to do certain additional procedures. You cannot do the standard procedures that are there. And therefore, we've also identified for certain elements where the risk is considered to be higher or significant, that there should be additional procedures done. So we have about 34 additional procedures also mapped. So this is the entire size of our database. We've also developed a lot of templates. We did mention earlier, one of the key focuses that comes in is, are the auditors actually looking and trying to identify possibilities of fraud? We may not be responsible to go ahead and detect the frauds, but we should have addressed all the possible areas where fraud could occur and have planned our procedures towards it. So we also try to develop certain templates providing clear guidances to help the auditors to try and figure out where a possibility of fraud could exist. Now once you look at the standards again, it advises two elements. It requires you to consider revenue and management override of controls. Now, clear cut, no business is set up not to generate revenues. All businesses are set up for revenue recognition, because that's what results in profit, and that's the definition of a company, where a group of people come together to put in the resources and to generate profits. So if I say revenue is a fraud risk, then what are we trying to indicate? Are we trying to say that companies should not account for revenues? No. You are supposed to go ahead, analyze and understand the revenue basis that the company has, the policies they have, and try and figure out where the possibility of fraud exists, and link that possibility to the relevant assertion, and then see whether you have sufficient procedures planned for it. So what we've tried to do is develop templates. We've not gone ahead and said this is where the risk exists, but we provided necessary guidances to help audit firms to come down to conclude where exactly in revenue recognition could there be a fraud risk. Similarly, we've gone ahead and extended it, saying these are not the only two elemented areas of fraud. We've also brought in related party transactions. Why? If you look at all the cases that have happened in the past 5, 6, 10 years, significantly they are associated with related party transactions, which either were never brought to the notice of those people involved, it was never approved, it was not authorized, nowhere, not disclosed. It's only once it came into trouble, when the regulators started looking at it, whether it was the courts, whether it's NFRA or anybody else, is when the facts of related party transactions started coming out. And all times the question raised was, why did the auditor not ensure disclosure? Because you have a auditing guidance on related parties, you have an accounting standard on related parties. So what was it missing? So we do realize that yes, there's a lot of ambiguity in understanding who related parties are, figuring out what are party transactions, what needs to be disclosed, and therefore we've also classified that as a possible fraud risk factor, and there's a detailed guidance around that as well that we've kind of put together. So other things that we're giving is also all forms of notes, guiding questions, making sure these templates are easy to understand. We've not tried to make it just like a standard template. We've given leading questions, guiding questions as to how to understand the requirements better. We provided templates where necessary. I think in the earlier video that we showed, we have templates for sampling, we had templates for planning that is there, how that should be done, for understanding the processes, understanding the controls, preliminary analytical procedures. So a lot of these things we've created templates, simple and easy to understand. We've also put in templates for determination of materiality. What are the factors to consider? How do you calculate and document your materiality? A very detailed checklist on the role of EQCR. We mentioned earlier that one of the key concerns that even the regulator had is non-compliance with the quality standards. SQC1 is something that is there for namesake. Compliance with SQC1 is not taken in the mode in which it needs to be taken. So one of the key things is involvement of EQCR as well. Do we actually consider that person to improve quality, or is it just a tick in the box? So we've got a very detailed checklist which kind of indicates what roles and responsibilities the EQCR actually has to play. So it provides a lot of guidance to whoever is playing the role of EQCR, what they need to do. Because I'm sure if you've seen the way things go when the NFR is looking at something, it's not the engagement partner who's called up or penalized, it's the EQCR partner also who's getting penalized. So they play an equal role when an engagement gets done. So we've tried to see how much of it we can actually cover. We also developed exhaustive checklists to ensuring compliance with auditing standards, looking at compliance with Schedule 3, the various accounting standards, very specific guidance and checklists around 143.1 and 143.3, which is actually the reporting sections for the chartered accountant. Reporting under Rule 11, which was the new inclusion that came a couple of years back, and CARO 2020. Now, if you look at what are the key differences from CARO 2016 to CARO 2020, all the inclusions are fraud risk factors. So that also we've tried to link and demonstrate how these individual inclusions should be also factored and considered as fraud risk factors. So it's just not a matter of I mentioned something in my CARO report. I also need to go back and see, have I considered the implications in my auditing itself, my procedures that I've planned, disclosure requirements, and the main body audit report. I cannot say in the CARO report that my client has a Benami property. I need to go back and see. Now I have a big concern. If the management can go ahead and do such transactions, is the management reliable in the first place? The representations I've taken, are they reliable? Is this only in purchase of land and property they have Benami property, or all other transactions in the books also are questionable? So it's not just a matter of statement of fact. You have to consider the possible implications arising from this. And if you look at all these additions, they're all kind of indicative of fraudulent possibilities. So we try to link that and bring that also into our considerations. Now, I think Balaji mentioned earlier, when we started compiling it, we were thinking of a single exhaustive, package with everything done in it. But when we started talking to a lot of firms, it came back and said, it's looking too exhaustive. We cannot do so much of work. Can you kind of reduce it? Can you give us options on how to do things? So we sat, kind of put our heads together, and we came up with these list of packs that we would probably come out with on ADOC. We said, kind of when we will commercially launch for a couple of reasons. We are still testing the security setup around how the IP can be accessed, how do we set up the file accesses for users, as well as some firms who are still testing this out for us, giving their inputs on what could be further improved. So we are also collating that. We will be sharing some of the feedback we've got from such firms who have done the preliminary testing on what we have put together. So we've looked at companies, we looked at where it is prepared under Ind AS, with or without control reliance, under the Indian GAAP or IGAP, with or without control reliance, We also looked at LLP separately because A, there's a separate regulation, and the institute did come out with guidance on what should be the format of reporting for LLPs. And they had a slightly different format of balance sheet and P&L that was put in there. So you tried to provide that as a separate guidance. And then you have all the other varieties coming into 2 more. And then you try to create for specific engagements such as limited reviews, what needs to be done for tax audits, which was the first thing a lot of firms asked us whether we'll be providing guidance on that. And then of course for certifications. Now certifications, of course, there are many varieties of certificates that are available. What we've tried to do is provide some guidance and checklist, at least to take you through the institute's guidance note as to what you need to be aware of. We've not tried to cover packs for every type of certificate because there's no end to that list. So these are all the packs that we do intend to come out with. Of course, the list goes bigger when we come out with a technology tool. There are a lot more varieties that comes through, but principally this is what we would be providing. Now, how is ADOC different? I mean, when we keep saying the technology, what exactly does this technology feature bring? Now, before I go through each of these elements, Brinda, you want to come up? So I'll just get our CIO or CTO to kind of just brief the key technology features.
Yeah, good afternoon everybody. See, actually the security features of this platform is, just briefly give an overview on this. The security can be at 3 levels: infrastructure, user and the content. So infrastructure is, because we are hosting it in the cloud-based Azure setup, the enterprise level data security and security features will be taken from there. And the second aspect is our document management, our content management platform is SharePoint. So that also brings in inbuilt security features, which is there in SharePoint, which we are subjecting it to a security audit of, obviously. The security audit has been done and the report is awaited. So we are subjecting that to the security audit in terms of patch compliance and stuff like that, because the type of files which are being hosted in SharePoint in this platform are of specific nature. So tomorrow somebody should not put in a code or a shell script to actually extract the data and make it available for others. So those kind of things we are doing it. We are not leaving it to the SharePoint security features to cover everything. We are doing an independent audit for that. And the third aspect is at the content level. So when it comes to the content level, the way we are structuring the logical architecture of this entire setup would be like every audit, when an audit firm is onboarded, there is something called, in the logical architecture of a SharePoint, there is something called a site collection. Okay, so every audit firm will have its independent site collection. So one audit firm will not know what is the site collection of another audit firm. So that way, the content that you are managing for a engagement will be kept private to only to that audit firm. The second aspect is, within that site collection, the way the structure would be organized is every client will be a subsite. So once one client subsite will not be available for another client subsite. Okay, because the users will be defined there, they will have the access to those subsites. Then the third aspect is, within the subsite, the engagements would be structured. Wherever your audit engagements would be structured there, and all the files would be kept as document libraries within that engagement. So the third aspect, the second aspect of the user security is basically, because we have hosted it in Azure, we are leveraging the identity and access management of Azure, that is the Active Directory. So all of the users will have their work email IDs as their user IDs, and that will be registered as a part of the Microsoft, and that will be the user authentication that it will enable. Of course, there is a multi-factor authentication. So there is a single sign-on and a multi-factor authentication, which is there as a part of the user security. So the content security, as I told you, the way it will be structured for each of the audit firm, their content would be structured this way. And there is also certain level of access and restrictions that we have enforced on the document library, being and the nature of the documents or the templates that are there. So for example, certain templates which are very mandatory for an audit cannot be deleted by any user. Okay, certain sections which are flexible, because for that audit that section may not be applicable. That we have enabled for the user to audit team to delete it or not include it in the library. But certain templates which are required will be ensured that they are protected and they cannot be deleted. So the very purpose or the very intent of making it guiding platform for a auditor will be defeated if you allow the deletions of the content basically. So those kind of restrictions have been enforced, and we have defined a configuration for that, and every engagement will have a user group. The users who work on that engagement group only will be brought into that user group, and they will have access to that engagement file. So we can, when we show the demo of it, you can see that actually. So that way the content through user permissions and through these restrictions that we have configured on the document library of an engagement, we have enforced that and ensured that, you know, and other restrictions that we have enforced is things cannot be copied, templates cannot be copied, or your content cannot be copied to various other, make a copy of that template or a document, and then you cannot delete. As we said, certain things we have allowed for deletion, certain things we have not allowed for deletion, and print, moving it here and there, altering the structure of the document library, all that is not enabled. So that way the user will be having the, he cannot move around things and change, move the document from one library to another library, because it will not happen. You cannot share the documents, and you cannot copy, print or download. Restrictions are there. Of course you can upload the client provided documents or any other reference documents, any other supporting documents for a particular work paper can always be uploaded, and they will be maintained within the document library. So these are the security aspects that we have taken care of in terms of the putting in the architecture of that platform basically. So have any questions?
All these features are only for ADOC as of now.
These features will continue for ADAT also, okay, but we have we do this, we are now doing this onboarding little offline, okay. We are doing it like an offline workflow, and then integrating it, breaking it onto the ADOC. But ADAT will be an integrated one where the audit firm can onboard a user. Of course there is a workflow, there are approval mechanisms for that. They can onboard an engagement, okay. There is an extensive or a very comprehensive, I would say, or engagement onboarding feature, which will enable the engagements to be onboarded. Of course that will be subjected to approvals within the audit firm, like a partner or above him, somebody has to approve that engagement onboarding. So all these are integrated there in ADAT, whereas here it is kept little offline right now. And the same with respect to usage of the content, the templates, the documents, the restrictions on the content, that will continue into the ADAT as well. Okay.
One more thing.
Yeah.
So, since it is Azure AD, so when we will install it in our machine, some of the machines are also on BYOD concept, build your own device, considering the staff. So will it require the genuine license of Windows or Microsoft?
Yes, you should be on Office 365.
It's like,
Yes, yeah.
Version, then
It cannot,
information will
yeah,
be sent
sent,
to them.
yeah.
Because all of the
It is Office 365 you have to use, because it's a SharePoint online. So you have to be on Office 365.
Yeah, so we need to have
Yeah,
proper
Office
license
365,
Windows
yes.
as well as Microsoft Office to run this ADOC.
Yeah,
also.
Office 365 actually.
Yeah.
Now there is no, so you can work
Then
on any machine.
yeah,
So if you have a license, you can work on any machine. It is not bound to the machine that you are carrying actually.
That I agree.
So Office 365 will allow, I can log in sitting in some other machine. I can log
So
in.
only Office 365 or the Windows license also?
No, actually, Finite Look can help me out in answering that question. Yeah, it comes. See, now it is coming along with that, right? Windows and
Because for our Office systems, we can assure those have genuine license. But where the article staff is carrying their BYOD with some of the assurance we have compliance, then if those systems don't have genuine window license, then whether we can install this ADOC or not. For
So ADOC doesn't require installation, but I'll get Anand to.
no, they need an Office 365
Yeah.
license.
So the office licenses are required, but
So
we
our
don't. I get
email
your
IDs
question.
are on Office 365.
I get your question. So the enforcement of Windows being authentic is enforced by Microsoft. that's something that we can't control directly. So depending on whether that license is permitted through the office license, the user then will be able to use it. As long as they're signed into the...
His question is on two.
Yeah, no, I get
Windows
that.
itself may be
Yeah,
pirated,
yeah,
but
that's
the
what.
office license may be authentic.
Correct. So what I'm saying is that the office license is mandatory to be authentic. The Windows license, we can't ensure or we can't inspect.
I don't know
It's
how they are
Microsoft
tracking
that is
it. Because the risk comes if you're connected to the internet also they may be tracking it without necessarily using it.
Madam?
365 would be required.
Yes, Office 365
Because
license.
Because now all the current licenses are only Office 365.
yeah, but the old licenses are on the other. So 2021 is still working, and
But
in our
this is
office
because
we
it's
are having
online, SharePoint online, right?
yeah,
So
yeah.
it's if you have to enable the collaboration and all, it has to be on.
With Office 365, there is no Windows 13, 17 or 21.
Yeah, it is bundled along with they upgrade and maintain the Windows versions.
Ma'am, see if print is allowed, certain things can be used for client confirmation. So what is restriction for, what is reason for putting restriction on print?
So we don't want this because it is a combination of your customer data is also there and the IP of true and fair is also there in terms of those templates. So yeah.
Let me just respond.
Yeah.
So, client confirmation is not part of ADOC. Okay, that's a separate technical library and guidance which we will be coming up with, which the audit firms has to subscribe. Okay, in that subscription, certain templates you can't copy paste or print. Certain templates will permit printing. For example, confirmation format is there, we'll allow printing of that. But that is not going to be sitting in ADOC. That will be a separate subscription because confirmations are required for many items in the financial statements. I can't give everything in the ADOC. That is a separate intellectual property that will keep changing based on what is happening.
Thank you.
And what will be the process of retrieval? Let's say if we have to submit, let's say complete file to the.
So you will reach out to us saying that this file has to be submitted for this particular purpose. We will download the file and give it to you.
So archival facility is also there brought into it right now.
So archival is also,
and
therefore you
retrieval,
finish your
yeah.
audit and you have to archive under SA 230 within 60 days, you can archive the file. So the file will get compressed and it will go to a sort of a cold storage. Then tomorrow you want to access that particular file, you can access that particular file, bring it to the warm storage and start using it. That
And
this will
all
be
the
there.
working and all these things would be retrieved by way of the Excel sheet or the like in the template or it will be converted into the PDF kind of thing.
Yeah,
The
so
kind of
we are still working out the information security feature on that. If currently our Excel templates are all copyright protected, in the sense you can't copy paste anything. Okay.
Right.
If that feature continues, even if I move it outside, because some of them are through macros, some of them are SharePoint features, but it moves out of the SharePoint environment, whether those security features will work is something which we are evaluating still. That is going through the testing currently, and we will have an answer to that. We believe currently at this point of time, most likely it will be a PDF format. That is our current thinking, but
Right.
we want to see whether we can give the same Excel format, because that is the original format in which it was maintained, and then ensure the IP is protected. That is what we are trying to see.
Right.
I mean, if an online access has to be enabled, that will be easier actually. Instead of taking a printout and giving it, you can always specify the users whom you have to onboard for that link, and you can share the link to them. They can have an online access for a specific period of time, and then you can offboard them in case the printing has to be
But
provided.
you know that the house regulator is asking the.
They
data,
always
so
want it
they
in a hard copy, is it?
Always want in the pen drive or the something like that. They want the complete
They can
document.
they can always have an online access to it. They can access through if you give them the link, they can access through the browser and view the documents actually. If you want to avoid the printing, pen drive, yeah, you want, then we can retrieve it and give it, and then you can always.
Yeah, but right now, as what Balaji said is, we can give the data. What is trying to figure out is, can we give it only in PDF format, or can we give it in Excel, Word formats also, if the security features can continue once we pull it out of SharePoint.
Yeah,
So that is currently being tested. So once we are able to work that out, we can confirm it. If the security features fail, then it will only be PDF formats.
How would it clear if you somebody comes
Yeah, we can always share the link. We can always, yeah, we can onboard him as an
Because
external user.
file is anyway on the cloud.
Cloud,
So
yeah.
you can just add them and they can view.
Onboard the user for specific period. Yeah. Yeah.
So one of the security features
Disable
is
the
view only
user.
access. So
And we can only give view only access. There is no edit access for such. Yeah. Then you can offboard him after a specified period.
In few of the cases, peer review board is asking for the soft copy of the documents or maybe the summary, or at times they ask for like what all documents and evidences you have, because again in peer review they have 3 levels: level 1 company, level 2 company, level 1 firm, level 2 firm, level 3 firm. So it depends, like if it is a level 1 firm, they ask for the complete set of the documents. Then in that case, we need to approach you and ask for the pen drive or like what?
No.
Because
See,
that is again
see,
the
if they ask
important
for a soft
aspect.
copy, there is no issue at all.
Okay.
Actually, we can give a view only access to that engagement folder. Okay.
No, but
Yeah.
the peer review board will not go and review that particular document. Peer review board will ask for the hard copy of these documents. Then
But
in
you
that
said
case,
soft copy, so that's
no,
why I
no,
was
soft
wondering.
copy means they ask for either in a pen drive as he mentioned, or in a PDF form. Because if we, as you mentioned, that you will share the link. Peer review board will not go and check the link. They will say that we don't have so much time where we will go and
Sorry,
download
I
that
didn't understand
particular
the
link.
question.
Yes.
Peer review board cannot take any of your work
Sir,
papers.
while peer review is being completed, after that report is being submitted by the peer reviewer. After reviewer submission of report by a reviewer, at times peer review board is asking for the evidences,
Yeah.
like documentation, what
No,
all
that
documents
you
we are
reach out and
asking
tell us
for.
what is the information you
Yeah.
need. We'll download it and give it to you.
So in that case, we have to approach you. Then
Correct.
we will download
You can tell,
it
you
and
tell
then
these is what papers are required. We'll download
Okay.
it and give it to you.
Okay.
Yeah.
Thank you.
That is only in a defense. 99% I have not come across issues in the peer review reports where auditors have to defend. No, I know rigor is increasing, but defense is not really happening. Yeah.
And even the DC in case of disciplinary
Yeah, yeah.
are going on. Like if you are aware, lots of
We
professionals are.
believe, if we believe you use ADOC, you will not get into all those troubles.
See, but you never know when it can happen.
But
Yeah.
data is available always.
Okay, now other than these security features that have come in, there are certain features that are available in the technology. One is, we spoke about all risks, and as we know in accounting, everything is double entry. There is no single entry accounting. So if I have a risk impacting, say, property, plant and equipment, there will be the same risk will correspondingly impact another account balance. It could be bank, if you're talking about payments made. It could be depreciation, if you're talking about adjustments for useful life. It could be repairs and maintenance, if we are talking about wrongful capitalization. So a risk which impacts more than one, it has to impact more than one account balance. And right now, since we are using an Excel sheet, we got it sitting in separate account balances. You say it doesn't apply in one, you have to go to the other one and also say it doesn't apply. So that has to be done manually. So unfortunately, that's the limitation we have in Excel. We could have tried to complicate it using Visual Basic and a lot of other links, but that would have just complicated that Excel sheet and not really provided the benefits. So the tool that we are developing, technology tool, however, will have it automated. I say yes in one place or no in one place, it auto updates in all the GL codes where the same risk is getting transferred. So that's a benefit in the tool. It's a manual feature in ADOC. Attaching tick marks to capture notes. That is a feature that's available in the tool that we are developing. But in ADOC, you can't really do anything. You can put as a comment, you can capture it within the sheet, but tracking it otherwise is not feasible because we are using only the features of Excel. Similarly for review notes. The tool will have a feature to attach review notes, capture the status of those review notes. But here max you can use is the feature in Excel, which is again putting in comments. As far as sign-offs, again on SharePoint there is no feature for sign-off. what we facilitated, if you had seen in the video, was there is a preparer, reviewer kind of a category. You manually key in the name, put the date of review on it manually. The tool, of course, will capture it electronically. It picks up your system laptop date, and as and when you sign off, it will capture your initials and the date, time of the sign off, and that's how it gets monitored. That feature is only manual again in ADOC. We do have a trial balance feature that we've put in place, but creating it at account balance level, the testing sheets, the lead sheets, directly from the trial balance, it's facilitated clearly in the new tool that we are coming in. It's slightly a kind of a single statement feature as far as ADOC is concerned, because you can use the links that we've already made. You can use the benefit of creating like a pivot and coming to what the overall lead sheet would look like, but that's not at different levels. It's at single lead sheet level that comes up. Another feature is on file check. Benefit of when you have a complete database or a tool that is there, there's an auto check that comes in to make sure have all items been filled up, has all been entered into, are there any gaps that have not been filled in, any documents that have not been signed off. Those features the tool will have. However, again, since it's a SharePoint based MS Excel sheet, these validations will have to get done manually. Somebody will have to open each sheet and confirm, have every data been completed, have all review notes been addressed, have all everybody's names and sign off dates been updated. That will have to be done manually. So that is the unfortunate instance, that because it's a simple Excel sheet, we cannot kind of automate the process. We could have put a formula for the date, but the problem would be each time you open the sheet, the date would get updated. So again, that would not have been a viable feature within Excel. So we had to leave that open for manual updates. So try and take you some illustrative content. Kirti, can you? Okay, this is also to show that we have a multi-factor authentication that comes in. So all of you will have to, kind of download the authenticator on your mobile phones. Why do we need all these security features? A lot of client confidential data is maintained. So just to make sure that nobody gets unauthorized access, we had to kind of set up all these features to make sure only the right people can access it. So when we do a user onboarding, we onboard the user with both their email ID and their mobile phone number. So make sure that these are mapped. ये क्या आ गया? फिर से वही डालना पड़ता है. Yeah. So if you look at it, these are all the various engagement files that we've created. You have your Ind AS with control reliance, you have your Ind AS other than control reliance, your accounting standards for companies with and without controls, standards for LLPs with and without controls. You have a non-corporate entities, limited review, tax audit, certificate file. So right now this is the full database. As you get onboarded, depending on what you want, this is the kind of files that will come in for you as users. We are also working on the overall how the look and feel should be of the onboarded site. So what you get may not necessarily look like this, it could look a little different. Can you just go to the index file? Yeah. So this is the index. You start with the overall planning. There's a guidance on how this file should get used, the client acceptance requirements, understanding entity business. Now if you go into understanding entity and business, Kirti, just go into that, no? You will have templates and checklists, how to understand all of it. Starts from understanding what kind of business they are in, understanding who those charged with governance is, understanding who management are, because there's a difference between TCWG and management, understanding the IT environment, understanding what is happening on cyber security, because this has become a key area of interest for a lot of audit committees and board, especially after a lot of malware attacks had happened recently. So we've got a template saying what should you understand from that perspective as well. Then of course you have understanding account balances. You know, again if you look at it, we've covered all elements of the balance sheet, all elements of the P&L, key disclosures, because we have items on segmental reporting, we have Q&A on related party transactions. Just go down to employee benefits. You can. So this is just a format for capturing preliminary analytical. Right now, all of that is manual. You'll have to manually key the balances in. But in our tool, once you've imported the trial balance, these will get auto-populated in the tool. But right now, even though you have a Excel tab for trial balance, it doesn't pick it up directly. You'll have to still manually feed it in. Now, how is this different? Now, if you look at it, for all your Ind AS with control reliance, we have two tabs. One is called understanding an account balance. Understanding the account balance has very directed questions that they are asked for a person to evaluate whether something can be required to be understood. For example, you come in here, it asks you on what is the cost to company when somebody is getting hired. And for a lot of these questions, these are a little more direct, not process oriented. And therefore, and each of these questions, to the extent it applies to a process, will get linked to a process. Where additionally these questions, we have identified that there could be a risk involved. You know, when you try and understand this question better, you'll find that we put a risk. Go down to 6, or even here. For example, here, you know, okay, are there employees who are foreign citizens? Now, that's the question we are asking. And what is the statutory compliance? Especially because there's a matter of PF, at least for when foreign employees are on board. If there is no agreement with the host country, there's a requirement for PF to be paid locally on their global income or all amounts that are being paid to them. So has that been identified? Because a lot of cases we miss out on it. So we put that risk, specifically asking them to understand. Simple reason, a lot of people times I've observed in clients that you have a person of Indian origin but holding a foreign citizenship, foreign passport. And logically they fall under the fact of foreign employees. Though the person has an Indian name, is probably, if you go back to family, his parents are all Indian citizens, but that individual could be a foreign citizen. So we tried to highlight those aspects as well when we brought it. So there are a lot of questions, very directed questions on that account balance specifically. Those questions are mapped to, if you look at it, we've put in the risk, we've identified which all account balances get impacted. Because this risk is impacting trade payables, in addition to employee benefits, are also contingent liabilities. We've also said for each of these accounts, which are the assertions that get impacted. So these are all mapped and cannot be edited. What one can go and update is, if you have, you know, other than the head office, branches, or you're a parent with subsidiaries, this could be associated with one specific entity, in which case you bring that entity in, saying it's not impacting the whole company, whole group, it's impacting just this branch, this division, or this subsidiary. So you can identify it, because then your risk is precise to where it is. And especially if you have, let's say, you know, head office is in Bombay, the subsidiary office is in Kolkata, or you have a branch office sitting in Delhi. So you'll know which team has to do what. If I don't put anything there, nobody knows who has to carry it out. So if I say this applies to Delhi branch, or Delhi division, or Delhi HO, then that team that's working out from here knows exactly which ones they need to check. So we've given that feature also. Of course, right now it's all manual. The tool, once you onboard saying you have 15 branches, it drop down comes in saying which branch does this risk apply to. Right now we're not able to bring those features in. It's an Excel sheet, so you put it manually in. We've also gone and captured a question right next to these risks. Now what we've populated here is a host of what we think are possible risks that can come in. For your engagement, considering the size and nature, this risk may or may not be a risk of material misstatement. Now only when it's a risk of material misstatement do you need to carry out procedures. So there's a question that is asked. So again, we are looking at that we need the engagement teams to think. We cannot make this an audit automation. It cannot flow on its own. You have to answer these questions. If you say yes, of course, you go ahead, do your procedures. But if you choose to say no, you need to explain what is it that is making you say this is not a risk. Answer could be as simple when we spoke about foreign citizens, saying there are no foreign citizens in this company and hence this risk does not apply. So that is also unacceptable. But then at least there's a documentation, say I thought about it, I've evaluated and then concluded it's not applicable. So we've tried to make it as elaborate on all the risks as possible, and all of them carry these questions. Now this is as far as understanding account balances goes. These are also then mapped into individual processes. So this is like, from hire to retire sort of a process. So you got starting from how do they manage the headcount, and we've given guiding questions. When you try to understand the headcount maintenance, how is they maintained, who's tested for competence and accuracy. So when you sit with the HR person, these are specific questions that you ask them, and the responses you get is what you put down there. Now what are the possible risks that can come on errors in maintaining the proper headcount? We've got a risk that is identified. Again, it's linked to the relevant account balances, the assertions that come in, and here if you further go to the right, we've also mapped it to appropriate controls. So we've tried to be as elaborate as how the entire control process goes, so that the person testing knows exactly what they need to go ahead and test in this. The benefit we are also trying to provide with this is when we try to be as precise on these controls as possible. If your client does not have this control, this gives you the benefit to issue a management letter saying if this control is better, you can suggest this as an improvement to your clients. So right now, unfortunately I've observed, way back if I go back 25 years ago, management letters were a standard. It used to be a matter of pride saying, okay, I was able to get 3 points for the management letter in this audit. Now when I look at it, everybody's avoiding it. Now the comparison is not how many points I found, how soon did I complete my audit, which means I should have 0 observations. That's the only way I can close the area. So now the comparisons are, I finished it in 2 days. Somebody says I finished it in 1.5 days. So nobody's looking at did I actually find an observation. I think it's time we went back to that. So we are trying to kind of push in saying if you start giving management letters, improvements, there's a value add that the client also sees to it, and that facilitates your further discussions with them on what you want to do, how you want to do, why your costs have gone up, or you want a fee increase. I think the conversation starts becoming easier because they actually see you coming back and giving them something.
Identified. So where do we feed that?
That is just below this risk. There we've given blanks. So you can come and fill them here. So below each of them we put blanks. Though we've tried to be as exhaustive as possible. There are certain industry specific items that could come in. Right now what we've prepared is a very generic. We've not gone into industry specific cases yet. So we feel wherever you need to bring in something that's industry specific, we've left those blanks for you to
But we
bring
can't make any changes with the language that has already been put in.
No.
So for the description of control, description of control, we can change that also or not, because process may be different at different clients.
Currently we have not. What we facilitated is you probably bring the same reference down here and you put the new control that you have there. And when you ask whether this is being done, you say no, control is different, please refer below, and below you would have captured the new control. Of course this is in Excel, and the tool will probably be letting you facilitate adding a new control and linking that, because here we could not get that done, because the fear here was if we allow edits, somebody may just delete it and then forget to update it. So we had to make sure the erroneous delete doesn't happen, so we had to restrict it. Because it's Control Z may not work sometimes, you delete and you forget, then now you're wondering how do I bring this back.
Basically this is idle personality.
Yes. That's why I said, if your clients do not have it, it serves as a management letter point as how they could improve it. So similarly, we've got a lot of processes. I think here we got about 15 or 16 processes that come under this, where you try and cover a lot of miles.
Most of the clients, at least the medium and small clients, they are compiled under the internal controls reporting because of the thresholds which are there. Their documented controls will be actually very poor. They will simply say CFO approves it. CFO approving is not a control. You know how the CFO approves. He will be talking to you and signing a check. You don't even know what control is exercising. So we are trying to bring in a control activity. So for the client to replicate this will become very, very relevant and important to them. When you try to bring in the client's control, very likely it will not be a control, or the control would not have been, at least in description, would not have been designed appropriately. It will fail the design test itself. So our thinking is the controls which we have defined should apply in 90-95% of the cases. If it doesn't apply, similar detailed control should be there with the client, with whatever modifications are required. And if you see the control description, can we move to any control description? So we have only said account stream prepare. We have not said who. That who is going to come in the next. Go to the previous column.
Yeah, it comes to next.
Where?
Yeah. After control frequency, control owner.
Yeah. So here the control owner name will come. So the description there is generic, whereas here it becomes very specific. So therefore your description can be as generic, because tomorrow the employee may change. You can't say X is doing it. Tomorrow it may be Y. So therefore we are trying to give a generic name. This can keep changing. Your control doesn't change. Control is the same. So we have thought through a lot of things in terms of how this has to be designed, and we have tried to bring it as generic as possible so that you don't feel the necessity to change things. That is our whole idea. You may be compelled to change where the client has a completely different process. That may happen. We don't deny that. But what we have given, we believe, is very, very comprehensive from a design perspective. See, today, advantage we have is NAFRA has not understood controls fully. They are not getting into details on controls. They are talking of controls at a very high level. But tomorrow, if they become like PCOB, where they understand controls, 90% of our audits will collapse. Pardon?
It will come to that.
No, but so therefore I am saying we should better prepare for that, no?
Yeah.
That is our whole attempt. See, today they are not fully focusing on controls because they are finding bigger issues, easier issues to pick up and turn. Exactly. So once they get trained, educated, this will become a huge area of problem for us. Yeah. Controls is going to be the biggest area of problem for us.
Today our ICFR report doesn't talk about any qualification.
Yeah.
Even in our revenue samples, we can have cut-off issues. We can recommend that some of our cut-off samples were rectified by the management before the finalizing revenue, but we don't mention it in our ICFR.
You don't even evaluate the magnitude of errors is possible, because there you are looking at potential.
Yeah.
You are not looking at the actual errors.
As soon as we have any issue in our cut-off samples, ICFR report should have that qualification.
Yeah.
Similarly for inventory valuations.
Very simple thing. Every client we curse on their financial closing process. We say the client doesn't give the information, they're terrible, so many mistakes, everything. But no report is qualified on controls. You are already cursing him on controls, but you are giving a clean report. So all of this will become an issue.
Kirti, you can go to another pack. You can close this. Hey, not Purani. Hopefully it will open, or again. Nahi, khul gaya. Not that. Go to AS company without controls. Yes. Similarly, you can just go to employee benefits. So here, since it's not control reliance, there are little more detailed substantive procedures that we've given further. Again, this is on the headcount matter. So since it's non-control reliance, there's no control description, but there's detailed procedures that need to be carried out as far as substantive procedures is concerned. So that is the key difference that we've done, where it's control reliance, there's more focus on the control descriptions and activities. Where there's non-control reliance, there's more detailed substantive procedures. Just close this tab. Go back to the portal. Your portal pe aake go back to the IndAS file, the first one. You could just show your trial balance and sampling, the audit planning document. Because it was a kind of quick check in the video, so perhaps if you want to see, we have two. One is monetary unit sampling, where the materiality number identified has a role to play in the sample selection, including whether it's control reliance or not, and what the level of risk is, whether it's significant or other than significant. All the, we put in a formula, so all these factors go in trying to work out what would be an appropriate sample size. And then once you put in the journal entry wise details below it, it ends up selecting the samples that you want. So we try to automate how much ever this is possible. Similarly on random. Only thing with random is because it's formula generated, each time you open the sheet, the random number changes. So we try to make a report the first time it is run, and that report stays stagnant. So hopefully you can use that as reference, because otherwise the reviewer, whether it's manager or partner, may get confused as to why the samples are different. Yeah, so the output comes here as a report when this is done the first time around. So in one way, what we try to do a little differently, I think you can just come down. Okay, we put in kind of 5 questions. The requirement under controls is, first you're supposed to evaluate design. If the design is done correctly, then you go out and do an implementation check. Implementation is again as of a date, as of a time, at a point in time, evaluation whether the control is working. If you conclude it's implemented correctly, then you plan on the operating effectiveness, which is whether this control is working as competently over the period of time or intended period of reliance. So when you look at that, how do you evaluate whether the control is designed for the risk it's supposed to meet? So we kind of put 5 questions. As you address these questions, it will help you evaluate and conclude whether the control is designed appropriately or not. And then of course, as per the guidance note, there are a list of questions below, and how do you evaluate the implementation or evaluation of the overall control. So we've got all those questions. You just need to answer against each of it for whichever control this is being tested for. Here again we've given a guidance on how this template has to be used. Again, it's a little restrictive because we're using pure Excel and linking and filters and all for the mapping purposes. The tool we are developing will have a kind of an API kind of setup where you can open it. It comes as an add-in within your Excel sheet, if I'm not mistaken, and you can use that add-in to import the client's trial balance into the format and map it all. Here currently that feature is not there. So again we've linked it. This filter gives you onto the note line. So you bring in the client's trial balance here and you start mapping it as to where it should be targeted. So that kind of happens as a grouping, and then you can map it all the way right up to the FS line items, which are currently mapped with the schedule 3 requirements. So you'll be able to confirm whether these totals are mapped with and agreeing with the draft financials given, which gives you a comfort whether the groupings done by management and the groupings considered by you are consistent or not. And that kind of becomes a quick check whether all numbers have correctly come in or not, or are there any adjustments recorded directly in the Excel sheet which you are not aware of. So this serves as a quick check in that manner. We've also facilitated within the Excel sheets to capture any specific correction entries or audit entries as we call. Anything that's come up, you put that up here, this will get updated into the trial balance. You also have next to it the GJs or grouping journal entries where amounts are getting reclassified. Your receivables includes debits and credit balance because the customer accounts are that way. You reclassify the credit balances separately. So how do you get it? We post an entry here that gets updated within the trial balance that is there. And yes, as I said, we use the feature of pivot tables to kind of create a testing sheet. So once all of these are filled up, you can create it. But the way it is set up, it creates testing sheets across all account balances. You will have to copy paste it into the relevant lead sheets in the relevant area later on. Again, that will get automated in the tool. If for relevant areas, the lead sheets will get updated. So again, here we've got assessing risk of fraud, various templates that we discussed on what kind of questions you need to do, how do you need to analyze when you look at revenue, when you look at management override of control, what kind of discussions should you have with the engagement team, what discussions should you have with management, what discussions with those charged with governance. So there are a lot of templates and kind of questions and guidances on A, what should you do, and format in which you can capture the information. Just go to audit planning, otherwise, yeah, here, or you can go to this also. So again, these are all the checklists that are there. You got your 143, 1 and 3, including 11 checklists for both standalone and consolidated, your CARO 2020 checklist. So auditing standard wise, it's consistent. I think the institute also had come out with a publication for guidance on checklist for compliance with auditing standards. So we've added some more points, but principally in line with that. So we've got a very detailed EQCR checklist on what needs to be done by the EQCR. So this is kind of a mix of guidance and checklist. So we told them what they need to do, and the checklist portion is yes, I've done it, or not, I've not done it. So that becomes the cross check for the EQCR. Yeah, so we again have a Ind AS checklist on presentation and disclosure only, not measurement and recognition. That is individually needs to be checked separately, but this is more on the presentation disclosure requirements. So for going concern, both at standalone and consolidated, how do you evaluate, what do you need to do? There are certain guidances, little bit of yes no to see whether you complied with what is required. So we try to see as much as possible to give the kind of a guidance or a question so that anybody who has to do it has a fair idea what they need to do. Similarly, you can open limited review. Go to understanding account balance. Go to property, plant and equipment. So here also we try to give, of course, understanding internal controls, the way process we've seen kind of remains similar. Your analytical review also is not very different except for some new columns. You can open this review procedures. So what we also try to develop, as I said, most of it is manually to be updated. We try to give what are the minimum procedures one needs to do as part of a review. You get the asset register, you reconcile it to the GL, you look whether the additions totals are matching, you work out and see whether depreciation is okay, has there been any change, has the movement been in line with the capital budget. So all these are what kind of inquiries you need to do, what do you need to understand. There's a kind of a minimum procedure. And then at the end we've got any additional procedures for your engagement entity you want to fill up. You can add those additional procedures if you want. But at least this gives that minimum what needs to get done is kind of done, including for how do you check for depreciation. So this will be kind of built. You also have go to the limited review checklist. Okay, we've not brought in here. Bharav? Okay, that must be sitting outside then, not coming in. But there also you try to cover from client acceptance right out to reporting, including SEBI LODR compliance overall like a method of checklist. Yeah. You can look at tax audit. There also go to tax audit checklist, testing form 3CD, tax audit checklist. Yeah. So here also we try to give as much guidance as possible and capture to make sure that everything is done how it needs to be done. Though slightly in progress, we are also trying to work out work paper templates in which a lot of this data can be captured by the teams. But currently there's a lot of guidance. We've also given a cross reference to the institute's guidance note or wherever necessary to ICDS para reference, so that why we've asked you to do this or how we are looking at this also with certain guidances. Yeah, this should be okay. Thanks, Kirti. If you can go back to the presentation.